Hello and welcome to the class. In the previous lecture, we talked about the cash flow statement, theoretical part of the cash flow statement, and we also talk about the different type of activities which is being calculated at the time of calculation of cash flow statement. In today's lecture, in this session, we would be discussing about the full calculation or complete calculation of cash flow statement, how we are calculating operating activities, financing activities and the investing activities all together. Just a quick recap before starting the session that we talked about the cash flow statement, like cash flow statement is talking about the flow of cash and cash equivalent, in which we talked about that what is cash, that is liquid cash, that money which you are carrying in your hand, and in place of the cash sometime we are also using cash equivalent. What are the cash equivalents? Means sometime you are paying through online, sometime you are making the payment by the check, and you are online you are making the net banking you are using and making the payment online. Maybe your money is being kept into the bank, that is also known as the cash equivalent. Your marketable securities, it is also known as the cash equivalent, and the money which you are carrying in your hand, all these known as the cash equivalent. So, moving further we will talk about the different activities, operating activities, financing activities and the investing activities. In this process, in the process of this lecture, I will go in the detail of this. See, this is the question for today's session. From the following balance sheet of Samta Limited on 31st March 2019, prepare the cash flow statement. Need to understand here only, this is the balance sheet which is given for the 2 years, that is for the 2019 and 2018. Why these two balances are being given? Because by this we can actually check the cash inflows is there or cash outflows is there, means any increase or any decrease is there. To identify the increase and decrease, we starting with the equity and the liability, and the share capital is being given like it was 7,50,000, earlier it was like 7,50,000, means there is no change. It is similar like last year. Reserves and surplus, it was minus 20,000 last year and now it is being increased by 3,10,000, means increase, means inflow is there. In non-current liabilities, long term borrowings, 8% debentures is, earlier it was 1,50,000, now it is 2,60,000, means increase. Share has been, debentures has been increased. Now, we will talk about the current liabilities, short term borrowings, 8% bank loan is there, it is earlier 50,000, now it is 40,000, means some kind of payment has been done, and means outflow. Trade payables, it was 1,10,000, now it is 1,20,000, it is increasing. Short term provision is 40,000 earlier, now it is 50,000, again increasing. The total comes out is, in total it is increasing, in total your current assets, your actually liability is increasing. We will talk about the asset here, non-current assets like fixed asset is being increased, earlier it was 6,20,000, now it is 8,60,000, it is increasing. What is the meaning of increasing? Means fixed asset increasing, means purchase has been done. Purchase has been done means outflow of cash. Tangible assets is, earlier it was 40,000, now it is 50,000, means decreasing. Intangible asset like goodwill, it was earlier 80,000, now it is 1,25,000. Non-current investments are there, no. Current assets, current investment, inventories, trade receivables is being given 50,000 earlier, now it is 5,000 only. Earlier it was 1 lakh, it is being increasing 1,95,000. There is a no change in trade receivable and there is a change in cash and cash equivalent. Earlier it was 25,000, now it is 1,30,000. So, there are some notice also being given 1 and 2 and 3. We will check it here. It is being given for the share capital, reserves and the short term provision. So, what are those? For the share capital, it is being mentioned that in 2019 it was equity share is being given for like 50,000 was this, and it is like 5,50,000, and the preference share earlier it was 3 lakh, now it has been decreased like 2,000, means the total coming out is equal, but the bifurcation is being done. The ratio, the composition of equity and preference share has been changed. Earlier we are issuing more preference shares, now we are reduced it, and earlier equity share was less, but now in this year we have increased the equity shares. Reserves and surplus is being given. Earlier no reserves and surplus in the last year, but this year we having the 10,000 for the securities premium reserves. General reserves is also being maintained. Surplus balance of statement of profit and loss account is, earlier it was 1,40,000, it is in bracket, means some kind of loss is there, and now it is profit 1,50,000. For the short term provision, provision for taxation is being given. For the short term it is 50,000, 40,000, similar for the provision. Okay. So, there are some additional information is being given. During the year of a piece of machinery costing rupees 60,000 on a depreciation charge rupees 20,000 was sold on 50% of its book value. Depreciation provided on tangible assets what? 60,000. Second, income tax for 45,000 was provided. Additional debentures were issued at par on October 2018. Bank loan was repaid on the same date. At the end of the year, preference shares were redeemed at the 5% premium. So, we will start the question solving this. This is the format which we are using today for making it. This is the actually direct method. Earlier in my previous lecture I told you about the indirect method. In the direct method we consider all the receivings and all the payments, and then we calculate the operating activities. Fine, but in the indirect method first we take out the net profit, then we do the backstep adjustments. So, in this cash flow from the operating activities is cash sales, cash received from the debtors, cash purchase, cash paid on the creditors and other expenses, cash generated from the operating activities, income and tax paid, cash flow from the extraordinary items if in any plus minus is there. The money, the amount flow is there known as the net cash flow from the operating activities. Now, second part is talking about the investing activities. We will consider all the receipts or the inflows and all outflows. Okay. All the inflows will be added and all the outflow will be subtracted for the investing activity. For the third one is we having the financing activity, and this we having inflows, these are all inflows and this is our outflows. Okay. Now, we will solve the question. Cash flow statement for the year ended 31st March 2019, we need to write it here, the company name also, company name will be there, and then we will start the question. The very first we are doing the calculation for the cash flow from the financing activity. Okay. The profit is there mentioned like closing balance of profit and loss is 1,50,000. From where we have taken this closing stock, we will check in this. The profit and loss is being given here 1,50,000. This is your balance. This is the current balance. So, we will consider this year balance only. Second, net opening balance was 1,40,000. Provision for taxation was made by 45,000, where it has been written, it was income tax provision was made by 45,000. Okay. Now, we will take 45,000 has been written here. General reserves were 30,000. We will check in the balance sheet which is being given to us. General reserves and surplus was this, and the note is being there. So, we need to look at provision is there 40,000 and the 50,000. For this year it is 50,000. Okay. We have taken the general reserves also. By adding all these, the total is coming out 3,65,000, and it is known as the net profit before tax and extraordinary items is 3,65,000. Need to add in 3,65,000, I am writing it here for the continuation, 3,65,000 5,000. We will add some more item into it. We will add the depreciation on the fixed asset, the loss which has been arise at the time of fixed asset, interest on the debenture, interest on bank loan, premium on redemption of preference share and goodwill written off. So, one by one we will see the calculation of this. Fixed asset, the depreciation in the adjustment, depreciation is being given. It is being tangible 60,000 and a piece of machinery was purchased 60,000, which depreciation charge was rupees 20,000, was sold at 50% of its book value. So, the amount which is coming out is 60,000. Loss on sale of fixed asset was rupees 20,000. We will check the fixed asset. Fixed asset is being given here. See, there are some adjustment is being given. Tangible depreciation provided for this, and there was a loss. We calculated it later. It was 20,000. Interest on debenture was at the rate of 8%. Calculated at 1,16,400. Interest on bank loan was 3,600. Premium on redemption, premium is the amount which you are, suppose you are issuing the share at par, amount is 100 rupees suppose, but once you are issuing it on premium, means 110 would be there, additional charges. But at the time of redemption, they are actually redeeming on, redemption is being done on the part of at the premiums, means for 100 rupees at the time of purchasing, now you are paying 110 rupees back to the shareholder, because you are redeeming it at a premium. Goodwill written off like 25,000, we will add it, the total will come out 1,30,000. Moving to next, operating profit before working capital adjustment. How this value has been come? What we have done, this is 3,65,000 and this is 5, 9 and 4. This is the total which we have carried out. This is the total. Okay. Now, what will we do? We would be checking that whether the current assets is increasing, current liability is increasing or decreasing. We will check this increase and decrease. So, if is there any increase in the current asset? If there is any increase in the current asset, that time we will subtract this. If is there any decrease in the increase and decrease in current liabilities, it will come into this head. We are mentioning like inventory is increasing only, there is no decrease in the current liability, and in the second one we will subtract this amount. Increase in current liabilities is there, trade payables has been increased by 10,000 rupees. So, we will add it, the total will come out, because it is a negative figure, 95,000 minus 10,000, it will come out 85,000. Now, we will check cash generated from the operation is, what will we do? We subtract this thing, why it will be in the minus. Why minus? Because the 95,000 amount is in the minus, it will come out 4,10,000. Now, we will subtract the tax which is being given in the working note 3. Tax paid was there, it was 35,000. I will show you where it has been given. Working note 3, tax has provision for taxation is being given 50,000 and 40,000 for the previous year. This year it was 50,000. So, we have taken it here and 35,000 is the tax. How this 35,000 has come? Because 40,000 was a balance for first year and the 50,000 was the for the second year. For it was for 2018 and it was for 2019, but one additional working note was there. The income tax for 45,000 was provided. So, what will we do? We do the adjustment here, 40,000 plus 45,000, the provision which has been given, it comes out 95,000. Now, we will subtract the 50,000 out of this. this 50,000, and now the amount which is coming out, the like 35,000 will be there, because the 40,000 for the first year for 2018 and for 2019 it is 50,000. 35,000 has been written here. The now we will subtract this 410 plus, we will be subtracting it, it will come out 5, 7 and 3,75,000. This is the amount which is coming from the cash flow from the operating activities. Moving further for the next part, we will take the balance 3,75,000 here, 3,75,000 we will carry it here. What sales we have made in this? Sale has been done for the fixed asset was rupees 20,000, and purchase of fixed asset was given in the 3,40,000. Purchase of investment was there 45,000. I show you where we have taken this amount. See the additional see, tangible goodwill has been increased, goodwill has been written off, we have already used it, and it is like it is being sold out. Fixed asset was rupees 6,20,000, now it is 8,60,000. Okay. So, sale of fixed asset was 20,000, purchase of fixed asset was 34,000. I will show you the working note here. For this working note, we have prepared the fixed asset account, because two balances as being given. It is the opening balance which I have just show you in the balance sheet. Opening balance, it was in 2018 and it was in 2019. This is the closing balance for 2019. So, what we have taken, like depreciation was mentioned in the adjustment itself, it was costing rupees 60,000, and sale, loss on sale of asset was also mentioned in the additional information, it was 20,000 being given. The sale is being done 20,000 and purchase, this is the balancing figure. By making the total of it comes out 9,60,000, and out of the 9,60,000 you are subtracting 6,20,000, it will come out 4 and this will come out 3,40,000. Okay. So, 3,40,000 has been given here, because we have purchased the machinery and the sale of is done for 20,000. Purchase of investment is also being done. See this in the balance sheet, investment is being given here. Okay. We have considered the income tax, we have considered the depreciation, we have already considered the debentures also and preference shares also. So, all the adjustment has been covered. The investment part was 45,000 of the purchase was done for the investment. This total is coming out. See, for purchasing the amount will be in the minus, purchase of the investment again it will be in the minus, the amount will be 5, 8 and 3. Subtract this 20,000, because these are the two figures which are in negative. So, this 3, 6, 5, this is the amount which is coming out. Okay, we will carry forward this is the net cash received from the investing activities. Now, we will subtract the 3,65,000. Now, we are moving to the cash flow from the financing activity. In the financing activity, we do consider about the two things, means first one is we will talking about the issue of preference shares equity shares or debenture, because this is how we prepare the capital debenture. We need to check it into the balance sheet which is being given in the question itself. And now we need to check also that whether there is any redemption of the share also. We will check the issue, because by the issue the cash inflow will be there. It will increase our cash. It will be cash inflow. For the cash outflow we need to check for the outflow, is there any redemption of preference shares, debentures or any equity shares. We need to check it. Before going to this, let us go to the balance sheet, back to the balance sheet. See here, in this it was equity share was rupees 4,50,000 and now it is 5,50,000, means there is an increase of, we have raised the debentures, we have issued the debentures, and again at the part of this 1 lakh redemption is being there. So, amount is equal, and for this additional debenture were issued at par in October and bank loan was paid. How much debenture was issued? Debentures is being given here. Debentures was issued at the same 8%. It was 1,50,000. How many share debentures we have issued? Means 1,10,000 debentures has been issued. Let us go back to the question. Okay. Proceed, this was the amount which we have taken, like proceed for the equity share was rupees 1 lakh, because 1 lakh share, 1 lakh amount rupees has been raised, it was an inflow, it will be a positive amount. Proceed for the issue of debenture, 1,10,000 debentures has been issued, which I have just shown in the balance sheet. Interest on the debenture paid was 16,400. It is a payment. Once your interest on it is paid, the amount is being paid, it is means cash outflow is this. Once you are paying, that it is cash outflow. Redemption of the preference share, it was amount rupees 1 lakh, again this is cash outflow and we will consider it into the negative value. Premium on redemption of preference share is being given, as it was mentioned here at the time of the redemption. See here that 5% premium was given. For 5% premium, the amount will be calculated on this. 1 lakh has been redeemed. So, 5% of 1 lakh will come out the 5,000. This is 5,000. Again it is, once it is received, it is cash outflow. Security premium reserve was mentioned by in the balance sheet, that is 10,000 rupees, and repayment of bank loan is 10,000. Once you are making the payment, again it is cash outflow. Interest on bank loan is paid, again it is cash outflow. It is 3,36,000. Now, we will sum up this amount, it is in positive, it is in positive, negative, negative, negative and so on. Again the payment is done, it is also in negative. So, this amount will come out 85,000. Okay, the previous balance was 3,65,000, 3,65,000 was our previous balance in the previous page. This is the net cash flow from the financing activities. This is how net decrease in the cash and cash equivalent. We will check it. It is 95,000 cash and cash equivalent at the beginning of the period. See this 40,000, and we need to check the cash balance in the balance sheet. See here in the balance sheet, the cash and cash equivalent was 25,000 is there and 1,30,000 was there. We will carry with this. Okay. 1,35,000 was in the 2019 and in the beginning it was in 2018. So, by adding this we will get the same amount 5 and 13. So, means what? here you can actually check your answer also. The balance which is being given in the question itself, the balance, I will just show you again, the balance which is being given here. See, 130 and 25,000 is being given here, cash and cash equivalent. You need to check whether your cash balance is equal or not. So, if your closing balance is coming at the end of the question is correct, that means your question is full and finally you have actually transferred all the inflows and outflows correctly. So, giving a quick recap for the same question to you, what we have taken, see this. First we have taken the operating activities, all the operating activities means we have considered net profit here, we have taken if there were any loss is there, we have considered it, we have also taken the depreciation part and all the cash receipts from the debtors, we have taken the cash paid to the creditors. Once we are making the payment, all the payments will go for the outflows, it is known as the outflows of cash or fund. Once we are purchasing anything, that will be purchasing will be go to the outflow, but once we are selling anything, sale is being made, that time it is increasing your inflow of cash. The activities by which your money is increasing, that will consider in the operating activities, and the operating activities are actually those activities in which you are considering day to day operation activities, by which actually once you are producing anything, the expenses, the incomes which are occurring at the process of the manufacturing, that is considered in the, that will be considered in the operating activities, and by making it we will get the net cash from the operating activity. In this question, in these type of question in cash flow, we get 3 times we will get the net cash flows, and the 3 times net cash flows would be, first time we will get the net cash flow from the operating activity, second time we would be getting it from the financing activity, that will be written, because these names are important to understand, these names are important to memorize, because at the end you would be adding all these 3. Okay. So, in the next, net cash flow from the investing activities means investment is being done in the fixed asset, maybe in the long term asset. So, that will be here only, and the financing activities, maybe you are issuing the shares, maybe you are issuing the debentures and preference shares, and maybe you are doing the redemption part. So, this is coming to the this part. By this amount actually showing you that this is your cash inflow, cash balance at the beginning and at the in 2018 and in 2019. If this is correct, means your question is correct. Do more practice for such kind of questions, as the book references which I have taken here, these are the Maheshwari, S. N. Maheshwari books and essential books from the Bhattacharya, Dhameja book and the Narayan Swami and Amish Gupta. These are the wonderful books in which you can do more and more practice. The more practice you will do, you can get more idea about this, because in one question you cannot actually be expert in this cash flow statement. So, do more practice, and if you having any query, any doubt, you can write me at meenu.balyan@imsec.ac.in, and you can send me your queries, you can send me your doubts, and definitely I reply you. With this, all the best and thank you so much.